All right, we are live. Welcome back to Dominating Your Investments. I'm Dom Rinaldi, and thank you for tuning into either the live stream right now or watching this later on the YouTube channel as a recording. So let's just start off with where have I been? It's been about 4 to 6 weeks since my last video on Unity stock. And of course, then we had this massive crash that we've been enduring, a lot of geopolitical tension and tragedies happening in Ukraine with Russia, and just the market overall with inflation and all the different things that we've had going on in the world. I started a new job about 7 or 8 weeks ago now, and so that has kept me very busy. But I'm excited to talk about stocks again and really kind of just let you know where I'm at, things I've bought. Let me share my screen here, and we're gonna just show you here. As we get this pulled up. Okay. Don't know if that is sharing here. Let me try this again. This is what happens when you get away for a little bit here. Let me just fix these preferences. And let's go here. Well, we have all the preferences here to share the screen now. Let me just make sure. Oh, there we go. All right. Well, it's a good thing that no one's in the live stream. So let's see here. All right, it looks like I'm not going to be sharing slides because it's going to make me close out my window here. So no worries, I'm just going to talk through it. So already covered where I've been. Look forward to doing more of these videos. Have I sold or bought any stocks since all of this has gone down last January and February? So I have not sold anything. So just clear that up. Have a long time horizon, at least 10 years. And these are for retirement funds. So did buy a lot of different stocks right around mid-January. I had some of my 401k at my former employer open up and was able to use that to buy individual stocks. And unfortunately, I bought a lot of invested a lot into my different stocks right about mid-January, and that's right before we had the big dip. I mean, things were still really affordable, so got things well below my cost basis. But as you know, from mid-January all the way till the end of February, we have just seen a crushing blow to the NASDAQ, a lot of high-tech stocks. There are some stocks that are 70, 80% down. Overall, most of the NASDAQ stocks are down, and it's really the FANG stocks that are holding them up. So holding the NASDAQ up. So I'm right there with you. My whole portfolio is down 40%. But that's normal, right, guys? Like, this happens every 7, 8 years or so, where we go through these different dips, and every 10 or 15 years, we have these very severe drops. So one of the things I would tell you is it really matters about your time horizon and what are you using that money for. I wish I had more cash on the sideline. I'm learning that. I'm always learning every day as an investor to take advantage of these time frames. I saw a really good post from a Motley Fool analyst, Morgan Housel, talking about the different percentages. If you had $1,000, when you would actually allocate and DCA dollar cost average those funds as you see those different market dips based off of history, uh, every 11 months, the market dips 10%. Every 2 years, it dips 20%, and so on. And then it's a longer period of time before you have those 30 and 40% dips. But allocating accordingly. Now, you can't really time the market. Now, you're trying to do the best you can, but just being patient and fully invested, which I'm currently fully invested on all of my positions today. You just have to sit back and endure. And I'll tell you, one of the things that's helped me out is just not looking at my portfolio every day. In fact, my new job has kept me so busy. I just really haven't, looked at it much. I mean, I see the very painful drops, but then the first thing I like to do is make sure to go into the earnings, the last earnings report, and make sure my thesis is not broken. Is this a drop relative to the macroeconomic situation that we're going through, or is there something fundamentally wrong that's causing shareholders to sell the stock, right? So those are my thoughts on the market. I definitely feel, though, I mean, it's never fun to see your portfolio down 40%. But when you have cash on the side, that just encourages you to build onto those positions of high conviction, to do more homework. And it's this constant of reaffirming what your beliefs are, and also making sure that you're well diversified. I have over 50 stocks, but really my top 10 accumulate about 65% of my portfolio. So definitely, you want to have a lot of different. We have our first guest in here. Where have you been? Hala Madrid 0709. As I was saying earlier, Hala, I took a new job at VMware, and so for the last 7 or 8 weeks now, I moved over to our senior product marketing manager team, and just been swamped in a good way. Love what I'm doing. Love the company I work for. And definitely, want to make sure to always have my family time and everything else. So, podcast, Twitter, YouTube, all of it just kind of had to be put on hold for a little bit. But I am back, and I'm hoping to really get in a rhythm again, so you guys can see me talk about stocks on a more regular basis. So thanks for the question. So we talked about, what we're seeing in the market, and I don't think we're done seeing the pain, just my opinion. How much am I invested in Palantir? Yeah, so Palantir have I been more bullish on Palantir with the recent current events? Yeah, so we can we'll jump right into Palantir here in a second, because I'm actually going to go talk about their earnings and where I stand. So I covered earlier, I haven't sold anything of Palantir. I haven't sold any stock, period. I'm still heavily invested in Palantir. It's by far my number one position. My conviction has not been shaken, but we'll talk about the earnings and just kind of what my thoughts are on that here in a second. And so in the market, Palantir could go down further, and other stocks could go down further. We still have the rate hikes to deal with that are going to happen. We're going to have one come up here soon, and then we're going to definitely have a much larger one anticipated in June. And we really don't know how many rate hikes are going to be, because it's all going to be dependent on what the Fed thinks is best, and how that all plays out. What I would say is, what I'm going to be doing is just having a little dry powder on the side. So as the market overreacts and overcorrects, I'm going to take advantage and buy more. And that's actually what I did earlier in February with Palantir, Tesla, and Nvidia. So those are, Nvidia is my second highest holding, and Tesla is in my top 7 or 8, I believe. So, and that's Tesla and Palantir were not even anywhere there in my top a while back. So before I knew about them, I knew about Tesla, but just never really understood the full value of what they were bringing as an AI and technology company. Never dug into it. Shame on me. It's so much more than a car company. Just would listen to the media hype. And I remember actually where I was when it was like $170 a share. This is way before pre-split. And this was right when they were looking at bankruptcy. And and they were saying that the stock could go down to $17. And so I was like, man, maybe I should just put $1,000 or $2,000 on there and see what happens. But unfortunately did not. So, but I have a good position in Tesla, and I'll be adding that. Nvidia, yes. Did I hear about the cyber hack? Yes, I did. I haven't dug into that too much yet. But just to answer any questions around, does that change my conviction on the stock or my position, or am I selling, or am I adding? I just think it provides a buying opportunity. I think I added some more when it's down like at $213. It's back up to 241. I don't know what the results of this hack are going to be, or how valid, and what kind of the exploit was. But overall, fundamentally, Jensen's still at the helm. The company is growing rapidly. They nearly had a near flawless earnings report. So super bullish on Nvidia. I mean, if the hack provides a buying opportunity, I definitely will be adding more shares. It's sad to see when things like that happen, and we live in a world like that, but definitely doesn't shake my conviction on Nvidia at all. So with that being said, let's just jump in. And I'm sorry my screen share is not working. I'll have it working for my next video, but I can just read off these earnings reports. And Blake says, I'm 30% Palantir, 65% Tesla, and the rest 5% a few others. That's two strong companies, very high conviction and high concentration. So, just be careful. A high concentration is risk reward, but you know yourself better than anyone else as an investor. So, and all of what I say on this podcast, YouTube channel, and everything else is not investing advice, just my opinion, just for entertainment purposes only. But hopefully you can get some education out of it. So looking here on my other screen on the earnings, I was really pleased with the Q4 earnings. I was really excited about how Alex delivered the results. And on the earnings calls, like the first time we've ever seen him do that. I thought he handled it very well. He's not always the most eloquent speaker, but that doesn't matter. Like at the end of the day, you want to hear from the guy who co-founded the company, who has the vision, who has the buy-in with his people, and can really answer some of the tough questions, and not just put a whole bunch of marketing stuff over it, or just kind of gloss over the tough questions, which I think a lot of people felt like had happened on the previous calls. So the earnings were great. I mean, you look at here, 41% for the year 2021, 102% year over year in fiscal 2021 for commercial in the US. So I was very excited about that. We want to see Foundry adopted more. We want to see them focus more on getting the message out there. There's still so many people that don't know about Palantir, or what they do, or that they're a commercial software company. So, they have that very well-known government presence, but they have so much more to go out there and evangelize, because their product is so good. And yes, it has stood on itself for so long by itself. To drive the company results that they had, having their CEO fly on a plane 29 days out of the year selling, it's pretty phenomenal, right? There's not many companies that could do that. So just looking at these highlights, right? So we got total revenue grew 34% year over year, hit 433 million, which was actually a little over what we had expected and what analysts expected on revenue. So that was good. Don't worry, I'm going to get to the EPS miss as well. Commercial revenue growth 47% year over year. The US commercial growth 132% year over year. And just want to give a shout out to Chris Jones on Twitter. He put a tweet together on the business model of acquire, expand, and then scale. And for anyone who's not familiar with Palantir's business model, that is their business model with their customers, where they're willing to spend time with a forward deployed engineer, and helping the customer really get the use case and ROI immediately out of the Foundry product, or Gotham if it's a government agency. And then, after a couple of those use cases starting to be met, starting to realize value and having things deployed and getting comfortable with it, then they go to the expand phase where they start expanding that out into other departments within the organization. And eventually it scales out. And in the scale phase is really where they have their revenue and their margin recovery. And what Chris tweeted was their growth was like 300K in 2020 on the acquire phase, and then it was like 80 million in 2021, and then the same concept with expand and then scale. And so what that tells us is a couple different things. One, they're getting better at time to value with the product itself, with deployment with customers, and they're also modularizing Foundry, so there's specific use cases that they can quickly spin up. We've seen that where they have Foundry for crypto, they have Foundry for HyperAuto for CRMs and unification with ERP systems. So there's a lot of different use cases that they can use Foundry for. And they have the carbon footprint one they're working on. So I think it's very smart that they are picking out specific use cases with their technology and verticals that everyone's challenged with, right? So this way they can immediately deploy it, have customers immediately see value, and then scale from there with other use cases. Because the beauty of Foundry is it's the unstructured data and structured data being able to be all collected together on their digital ontology, their platform, right? Their operating system of Foundry, and then being able to make decisions off of that with no code, and really making it easy for anyone to get value out of the product. So with Chris's tweet, we're just seeing the expansion of scale. We're seeing the expansion of time to value. And I think someone wrote in the tweet was, does this mean that we can look for the compounding effect of higher revenue contracts and more use as they scale out over time? And that's exactly what we can assume with that. That's the definition of SaaS, right? Software as a service. It's all about customer obsession, customer consumption. And the best SaaS companies in the world have a platform. And that platform is so sticky and so valuable, and it's delivering customers time to value with return on the investment of buying the product, that then what they will do is they will find other problems to solve and other use cases for other modules and start testing those out and purchasing those. And that's where we get the net revenue expansion rate for a lot of these SaaS-based companies, which is, could they grow year over year without adding any other customers? So when you look at like Snowflake, 180% at one point was their net revenue expansion rate. That means they could grow 80% year over year without adding any new customers. That's phenomenal. And that's because customers are consuming so much more throughout the year, even before that first renewal. So I think we will see that. And I think the product stands so much on its own, they're willing and can lose money for those first two phases of their business model, only then to gain a big contract at the end. And not many companies could do that, stay in business. And as we know, they're doing very well. They have a clean balance sheet. I want to say it was 2.3 billion in cash. Could be just maybe a little bit off there. No debt, of course. And so that's another thing that I really like with where they're at and where they're positioned. And he even talked about that in the earnings call. He talked about how we are built for bad times, right? And it was really nice to hear him speak on the financial health of the business and what needed to happen as far as time goes on in unpredictable environments. They're prepared for that and they can withstand. Let me see. I think we got some other questions here. Do you think Palantir will show their success rate for products for customers? Industry average is 85% failure for products. So we do think Palantir will show their success rate. That's a good question. I don't know. I haven't seen a lot of companies show their success rate on a lot of different software products, even in the commercial space. I think you can judge the success rate based on the uh, net revenue expansion and also the net dollar expansion, which is even more critical because that includes churn of customers, and their total net dollar retention was 131% for US customers. So it was a US customer commercial count increased 4.7 to 80 customers year over year. Customer count tripled. Commercial customer count in this past year tripled to 147 customers year over year. And then government net dollar retention of 146%. So that's how I would judge if the product's working. And to me, I mean, they've had 3 contracts with the Army, and so it's working. We're seeing customers spend more. We've seen several renewal contracts with the CDC and others. So I would answer your question that it's definitely working. Blake says, in terms of price action, not financial advice. Yep, of course, definitely not financial advice here. Where do you see the stock 1 year and 5 years? Ooh, that's a tough question. How do you falsify your thesis? Palantir 5 years out. How do you falsify? I don't know what you're saying there with falsify my thesis. I'll tell you how I will stand behind my thesis of, there's a lot of Palantir channels out there. There's a lot of smarter investors out there who do these very detailed DCFs, and some have worked on Wall Street. I don't know if you guys have watched Justin O. He has a YouTube channel, has worked on Wall Street for many years, and he's good friends with Tom Nash. They have a awesome YouTube channel called Unpopular Opinions that I watch all the time. And of course, Tom Nash's channel. And there's several others out there on Palantir. But I just bring up those two because both gentlemen have worked on Wall Street, and they've done some really good work on the DCFs. And the price target right now is like $25 based off of what we have from the financials and expected growth rates. And so very undervalued, right? I mean, at what are we at? 1140, I think, and we got down to as low as 1040. So I was bullish on the stock at 26. I was bullish on the stock when I first bought it at 29. Everything below that for me is goodness and extra value for the long term. So where do I see the stock in a year from now? Hopefully we get back, closer to that $20 range, but there's so many things that are unpredictable in the market right now. We have so many things from macroeconomics going on with where we are with inflation, where we are from our debt as a country, and the geopolitical things that are happening around the world. There's just a lot of drama, rightfully so, like really real problems in the world going on right now that have all impact on the financial macroeconomics of everything. So that's why we've seen like this huge sell-off in tech, because of the interest rates and everything that we're going, and everyone's piling into more conservative stocks. But I'm okay with that too, because that provides buying opportunities and then also weeds out who's not really holding the stock for the long term, right? Kathy Wood sold all her Palantir. That really was disheartening for me. I like her ideas of innovation and holding stocks for a long time, 5 to 10 years, and holding compounders and only needing a couple winners to carry that. It's very similar to the Motley Fool way of thinking with investing. So for her to get rid of all of that, either A, she knows something that no one else knows, and we're all bag holding and it's going to be brutal, or B, she's just trying to, or lost her conviction. Well, that's fine. If she lost her conviction, you should sell. Or B, she's just trying to get something in the short term right now. And I'm a long-term investor, so I'm holding this for the long term. Where do I see the stock in 5 years? I would definitely think that we're I would say 4 to 5x of where we're at now. I mean, with the valuations and the growth, but once again, like, can't predict it. That's just my expectation. That's what I'm holding for. But we don't know what our world will be in the condition, it'll be in 4 to 5 years. So That's why I do have a diversified portfolio, and I have 50 stocks. My top 10 make up 60% of my returns. Really, my top 20 make about 90% of my returns. So even if Palantir was a bust and I'm holding these stocks for 20 or 30 years, I'm confident that I'll have well enough for my retirement, as well as my kids, college and wedding and all that stuff. So that's kind of my take on that question. Thank you, Blake, for the good question there. So going back to the results, just overall, I was really pleased. They did have the earnings miss. That's what really kind of drove the stock even further down. Right now, in the climate that we're in, you can't really have this. And I like how Tom Nash just said, spade is a spade on this. Like you can't not miss. If you're that confident about your stock and how Alex talks about the company, everything, you got to make on the EPS. That's just, but then again, if you don't care about the stock in the short term, he really doesn't care. Like he's so focused on the future. So if it dips, it dips. Maybe, he even admits that sometimes, there's certain things Palantir is good at and there's certain things they're not. And they're great at making product, not always good about playing the game of what Wall Street wants to hear. So it's important that product stands on itself and they see that revenue growth. And that's what I always watch fundamentally with this company is, are they consistently adding new customers? Are they growing? Are they growing their operating margins and their free cash flow, which they did phenomenally this past year. In fact, I was trying to find the numbers here. I want to say it was 400 million was by the end of the year. Yeah, adjusted free cash flow, 424 million, representing a 28% margin. There are not many companies doing that. So I was very pleased with that. Their cash from operations, 334 million, representing 22% margin. I know a lot of people are concerned about the whole SPAC investment piece. And really, there's two ways you can look at that. The SPAC investment piece, you could say, well, I don't want to invest in someone who's trying to be a holdings company. They're not trying to be a holdings company, in my opinion. I think they're trying to think 5 years down the road. And I give shout out to Amit, another Palantir channel. He said this on a conversation with Tom about they're trying to make sure to be in the frontier technologies in the future that are data dependent. And when you think about genomics, you think about biotech, you think about autonomous driving, and you think about all these other different industries that they're involved in, and they're investing space, with some of the different SPACs there. If your software can be the backbone of these companies, and only a few succeed, but succeed very well, it is going to breed more startups wanting to work with your software. It's going to be great for branding. It's going to speak for itself. Also, investing in shares in those companies, you're going to get return on your investment. So SPACs have a really bad name because, well, they haven't performed very well in the past year and a half or 2 years. But I think some of those companies, even if some came premature public, if they can keep a healthy balance sheet and show growth and innovate and be disruptors, and Palantir can help them do that much faster. Ouija is a great example of that. I think that people are going to be surprised 5 years from now what some of those investments, how they pay off. And a lot of my conviction in the company comes from the leadership team. I have full confidence in Alex and Peter and that board and the employees and the culture that they have and what the mission is, So I think that's pretty much just wrapping up Palantir. I mean, my conviction is unshaken. Like I was very impressed. I mean, they closed 64 deals of 1 million or more, 27 deals of 5 million or more. Yes, I know the government sector was declined last quarter, but government's very lumpy. Like there's a lot of government spending that's locked up right now that hasn't been signed for. There's a lot of contracts that are yet to be defined. And a lot of that too deals with the administration and how government spending is. So if I was an investor uh, investing for a year, I wouldn't even own Palantir. It's not something to just hold for 12 months. Like, this is something that you really have to believe in, that they're riding a trend, defining a data moat and product moat that will carry them for decades. And if you're willing to be that patient, so just, that's my 2 cents on that. All right, so we talked about Palantir. Let's go to Abcellera. Because I was also really excited about Abcellera and their earnings, and their stock got penalized as well, right? And I don't even know what it's at now. It's like right under $9, I believe. Um, and they went down as low as like 7, but price targets have been in the 40s for the longest. This is a case of a company being associated as a COVID stock. And so this is where knowing your company and knowing what they do and how do they make money and what is their customer base is so important, because Abcellera just took advantage of the opportunity that COVID presented in allowing them to show how fast their software could help define a antibody drug for COVID, right? They were the first antibody monoclonal drug with Eli Lilly that came out, right? So let's just take a look at some of the results here. I'll just read off. And also another stock I really like that I would say is thrown right into this wheelhouse of being called a COVID stock is Fulgent Genetics. Fulgent Genetics is a phenomenal company. They're profitable, just like Abcellera. They have a lot of cash on hand, just like Abcellera, and maximizing the advantage of COVID testing for them, when really their core business is next generation gene sequencing. So we can maybe talk about that at another time on another episode. So total revenue of 375 million, up from 233 in 2020, and liquidity over 720 million. Total cumulative program starts of 78, with 26 new starts in the year. So that's one of the things that I really look at this company like, how do you judge this company as success? Because we do know that the revenue and profits from COVID will eventually decrease and have. So how do you measure where are they going to get their future revenue from? And you really need to understand their business model and what it's going to provide customers from the value that they're going to provide, and how Abcellera is going to make revenue moving forward and profits. So they achieved a cumulative total of 156 programs under contract with 36 partners in the year. That's massive growth, right? So I'm looking for more partnerships, and they have continually grown those partnerships because of what they've been able to show. And a part of that was that monoclonal that they were able to deliver in like 90 days, because the software that they have and the process that they have is able to distinguish difficult types of antibodies to create and do it much quicker and more cost effective. And so in the drug discovery world, 90% of drugs fail, and they take about 9 to 10 years from conception all the way to fully product and FDA approved and selling. So they're helping speed up that process. I probably should have started that for anyone who hasn't heard of Abcellera. It's a tech. I will just read exactly how they describe themselves here: a technology company with a centralizing operating system for next generation antibody discovery. And so, just like Palantir, there's very similar things with Palantir software and Abcellera, in the fact that they define themselves as a platform or an operating system for their industry. And Peter Thiel invested $4 billion in this company. He sits on the board. So they have a very similar flywheel approach to their revenue and their customers, because they get revenue from customers, not only from milestones in testing, but also from royalties. And they even invest in other companies that can't afford necessarily to pay them a whole bunch of money on using their programs and software. So they will negotiate certain things of ownership in certain cases where it makes sense. So let's see here. So they generated 153 million in net earnings, up from 119 million in 2020. Let's see here. They ended up with 720 million in cash equivalents and marketable securities, and they have no debt. So I'm looking for companies during this time frame, like that have a whole bunch of cash on hand, no debt. If possible, if they have debt, then okay, do they have cash covering that debt? Is it low interest debt? And what's the reason for the debt? And are they growing revenue sequentially in the double digits? And do I believe that they can sustainably keep growing that, not just blow it out of the water and then not be able to continue moving on? Like, I can't remember the quote I heard, but I'll paraphrase it. In the long term with companies, you want to invest in companies that can show double-digit growth sustainably for a very, very long time. And those can be the true compounders, even when their revenue is so large, right? You look at Nvidia as a great example of this. I mean, Nvidia's been around for 28 years. So let's see here. They started discovery on 26 programs, bringing the cumulative number to 78. They reached a cumulative total of 5 molecules in the clinic across oncology, infectious disease, animal health, immunology, butchered that word there, sorry about that, dermatology, and gastrointestinal disease. So different molecules for different industries, verticals of health. And when you look at their earnings presentation and their analyst reports or presentation, you can see the flywheel of all the different things their antibody drug discovery can solve for. And once they get into those actual molecule clinical trials, that's when we really start seeing, okay, are they reaching milestones? Are we taking this drug to market if it gets passed? And so they had 1 molecule in 2020. Now they have 5. They acquired Tetra Genetics recently to expand capabilities for high-value transmembrane protein targets. I haven't dug too much into that, but I have heard a lot on some of the other, and this is where my medical community can come out here and correct me, but a lot of interest around proteins and proteomics and in the genomic space with what's possible there. So I don't know exactly what Tetra Genetics business model is, but definitely we'll be looking into that for future videos. Expanded the leadership team with the appointment of Neil Berkeley as the Chief Business Officer, Neil Ochben as the Chief Commercial Officer, and appointed Andrew Lowe for the PhD for Board of Directors. So you just look over, I mean, the number of discovery partners grew 33% year over year. Programs under contract, 51% year over year. Programs started, 50% year over year. And programs in the clinic, 400% year over year. Like, that's how I'm looking at this company. Like, this is a long-term play, just like Palantir. This is not something that I can be like, okay, it's at $9 now. It's going to, go to 18 by the end of the year. It could, one of their drugs could go all the way through and make it through approvals, but that's not why I'm investing. I'm investing in the business model, the company, the leadership, the ability of what the potential is in the TAM, the total addressable market for this company. What I believe that medicine will be 10, 20 years from now. We will have more personalized medicine. We will have more monoclonal and antibody drugs opposed to vaccines. So I think this is one of the leaders in that area. And, with companies like this, it's good to nibble a smaller position and kind of, grow over time. I've been in this for, I don't know, over a year now, I think, thanks to Sakin Sharma, who also has a Palantir stock YouTube channel. He got me involved in this when it was very small and told me to look at it because Peter Thiel was invested. And the company and the leadership, founder-led leader. That's another thing. 90% of my stocks have founder-led leaders. So Carl Hansen just won several leadership awards. This company's based out of Canada. They've just finishing up a new GMP facility in 2024. So I'll just finish up here just some other pieces of highlights for them. So R&D expenses were 62 million compared to 29.4 in 2020, reflecting continuing investments in capacity and capabilities of Abcellera's discovery and development platform. I want to see companies continue to spend more in R&D than sales and marketing, because that will help further their product, and a great product provides a great time to value for customers and a great ROI, which leads to more sales. So I'm really excited to see that they're spending so much on R&D, but you do have to spend in sales and marketing. Now you can see here, sales and marketing expenses were 6.9 million compared to 3.8 in 2020. So they doubled that nearly too, but it was a much smaller amount than R&D, which was good. And then the G&A expenses were 41.8 million compared to 11.9. So there was a lot more. It says here, with the increase primarily driven by investments to support growth of the company, non-cash stock-based compensation in line with public listed companies, and protecting intellectual property. So not too concerned about that, just because they have so much cash on hand and no debt. But that is something to pay attention to and to see if their G&A expenses keep growing. Net earnings were 153.5 million. So they're profitable. They're a small cap. In fact, let me just look up their market cap, because I couldn't tell you offhand now how small it is. $2.5 billion. Okay, 2.5 billion. So with how small that is, and a flywheel type of effect for revenue in such a wide TAM, yeah, there's a little bit of speculation here, but the likelihood of a $2.5 billion company getting a 5x in 5 or 10 years is a lot better than, a $50 billion company. I'm not saying it can't be done, but it's easier to move with acceleration, especially in this field where it only takes a drug or two and all of a sudden it explodes. And this stock did when their first drug with Eli Lilly came out. It went to $76 a share, and now we're sitting at I think a little under $9. So really happy with this company. No concerns. Just got to stay close to it. And let me see. We got 17 minutes, because I'm only going to do an hour of this for you guys. I don't want to keep you too long. I know these videos really should be more like 15 or 30 minutes, what people like to watch. But it's been so long since I've talked to you guys. So we covered Abcellera, we covered Palantir. Let's cover Tesla. I have grown such an interest in Tesla. I'm like the last guy on the boat who's excited about Tesla, because I haven't spent time digging into it. But listening to Elon and his Q4 earnings call, it was really entertaining just to listen to how blunt he is and direct he is. And I've been watching interviews, and I think he's a founder with a vision that, one, just like Alex Karp, and it really has way more, I think, stock than Karp overall, I believe, as far as his whole net worth is in his own stock. So he's putting his money where his mouth is. Like, if the ship sinks, so does he. And he said that many times. I believe a CEO or leader should go down with the ship if it's their company. And now, I mean, after all of the challenges that Tesla has gotten through, and all the hoops they've had to jump through, and really defy the odds to not go bankrupt, to raise the cash, to provide the product that has literally changed, the auto industry now with EVs, and will, I believe, change the industry even further with autonomous driving. Um, Now they have the cash and the healthy financial economics to really put this thing in acceleration. And the real advantage for them is data, right? This is an AI company. This is a data company, and they have the brightest minds working for them, right? And so, and they can pay them as such. They don't have to do an ungodly amount of stock-based compensation. Unfortunately, I know Palantir does right now, but even Karp said in his earnings call that that was going to decrease over time. So the operating cash flow less capex, free cash flow for Q4 was $2.8 billion. $2.8 billion of free cash flow when we had the chip shortages for semiconductors. They just took two new facilities online in Austin and in China. And it says in total 1.5 billion increase in our cash and cash equivalents in Q4. So now they have a total of $17.6 billion in cash or cash equivalents. So they can do a lot of great R&D work and a lot of further investment in AI. And we had the Tesla bot where he said, I believe the Tesla bot is the most important product and investment of our time right now to focus on out of anything. I think it'll be the most impactful product that Tesla puts out. And that kind of caught everyone off guard because that would be like the bottom of the totem pole and priorities that you'd think you'd hear from him. And what that gets for me is that gets me excited that they're not done innovating. They're not done shaking things up in the world. Like they're not satisfied with just being the best EV company in the world. Like they want to solve more problems. They were talking about their power stations in houses, and they were talking about how they could even help with HVAC systems and other challenges that the everyday human deals with in their home and energy costs. And so I think there's so much more runway for Tesla. And I think that it will definitely 10 years from now not be considered as just a car company like that it's being looped in as. So that gets me excited because anyone who's followed me knows I love data companies, AI. I truly believe that data is the new currency or oil for the world, and the AI race is critical for America to win. Profitability, 14.7% operating margin, and I'd expect that to go up with these new factories operating and going online. They haven't even reached their full capacity of pushing these cars out at full speed. $2.3 billion in GAAP net income, 30.6 GAAP automotive gross margins. 30% margins on an auto vehicle is insane. And then they had record vehicle deliveries of almost, let's see here, of 0.94 million in 2021. So almost a million vehicles. And their predicted run rate is only going to be higher. So they have the backlog. They're going to get more cars out. And this is a company that has so much cash on hand, has no debt, if I remember right. And the full value of what full self-driving is going to do to our world. And you've heard Elon talk about this. I think it's going to transform the productivity and open up so many possibilities. There are just so many different things that they can do. And as long as Elon's on the helm and they're on mission and on point, yeah, I get that they're near $1 trillion stock. I don't know what the market cap is now because I know the stock went down. I bought actually some more at like 740. And I was like, wow, this is the cheapest I've ever got it at. But it could easily 10x in 10 years. I mean, I know that sounds crazy, $1 trillion a year. But what this company can do from an AI and software ability and what problems they can solve for the world from an energy perspective, you got to think of the possibilities when you invest. Like, what is the grand possibility of the impact that this company can have globally? And I think this is one of those companies that still could pull out some really game-changing technologies that we haven't even thought of yet. So that gets me excited. I'm not going to get into all the other numbers. You guys can check out the report. Um, but I was excited. I think the next things to look for is where their update is with full self-driving at the end of the year. He said he thinks that they could have that fully completed. That's a tight timeline, but we'll see if that happens. And really want to follow, how the Austin and Berlin. I'm sorry, I said China. It was Berlin and Austin were the new factories, but just how production continues and what's next for them. So we will conclude. Can I do? Yeah, I can do Nvidia in 10 minutes. It won't do it justice, but let's see if we can knock this out. As you guys know, this is my second favorite holding, right up there with Palantir. I love both companies so much. Founder led, Jensen Huang is one of the best CEOs, if not the best CEO in my opinion. He's right up there with Elon and others, Alex. So just look at how awesome this earnings was for Q4. And I haven't dug too much into the hack. Like I said earlier, I'll look into the cyber attack and what the impact is there. But the way I'm looking at that is right now, may provide even a better buying opportunity on the stock. They are so consistent with their vision. I love that they have these 2 GTC conferences a year. They tell you what they're going to do. They tell you what they're going to launch, and then they go do it and they execute. And you look at, they had a record total in gaming, data center, and professional visualization revenue. Their total revenue was up 53% year over year to $7.64 billion for the quarter. $7.64 billion in a quarter, up 53% year over year, ahead of the outlook of 7.4. So they had a beat. Gaming up 37% year over year to a record 3.42 billion, and the data center up 71% year over year to a record 3.26 billion. I mean, these are tailwinds that are going to continue to grow. Data center, gaming, Omniverse with professional visualization. I mean, they're in all the leading areas where our world is changing, and they're the driver. They're impacting the world in so many different facets. So great overall, fast accelerated revenue at a large scale. You think, and they're not planning on slowing down. Like, the projections look even better for the future. We know gaming will get bigger, mobile gaming. We know the data center is expanding in the cloud. We know that the Omniverse and Metaverse are going to expand. So there's just so much they're involved with, and autonomous driving. So gaming driven by record desktop and laptop GeForce GPU revenue. The data center led by compute products on strong demand for Nvidia AI. That is actually a project that VMware is helping with them on and partnering with them on to enable AI inside of data center boxes that Nvidia sells, as well as OEM, servers from Dell, HP, allowing companies to have an easy way to deliver artificial intelligence. I mean, you just look at their financial summaries for the last 5 quarters, and it's just like this, or just like that. And they are just crushing it. I mean, you look at their gross margins for what's considered a hardware company when they're really a software company, 65.4% gross margins, non-GAAP 67%. Operating income was up 97% year over year. 97%. That is efficiency growing at its max. Net income was up 106% year over year. I mean, these are just numbers that are staggering. When you want to talk about when you're going through a market downturn, and what type of company do you want to invest in? You want to invest in a company like this that is just rapidly growing. So they pay a dividend as well. They have cash flow from operations up 47% year over year. And if we look here, I'm going to find. The only piece that they did not grow, and I anticipate this to actually be a much bigger driver, will be their autonomous driving. So they said the decline driven by legacy cockpit revenue and automotive maker supply constraints. So due to the supply semiconductor issues, partially offset by ramp of self-driving programs. They started shipments of Nvidia Drive Orin, which is their software for autonomous driving. There's so many manufacturers that they're involved with too, um, for autonomous driving and EVs. Expect to return to sequential revenue growth in Q1 with a more meaningful inflection in the second half of 2023 and beyond. Yeah, I mean, they're ahead of a market that's not fully ramping and expanding yet. We don't have this, they're ahead of the game. You're going to see that part of their business really expand over time. Record Q4 cash flow from operations, which you already stated. They paid some debt down, returned 100 million in shareholders in the form of cash dividends, and then at the end of the quarter, they had 21.2 billion in gross cash and 11 billion in debt. So overall, 10.2 billion in net cash. So they could pay their debt off. I think it's low interest debt. I'm sure that's from the Mellanox acquisition, which was very heavy. But they're already, really building this platform approach. And it's almost like a subscription model for hardware, because with how their DPUs and their GPUs, CPUs, GPUs, and DPUs, they have a new product coming out every 18 months. I guess I should do it this way. And so the amount of compute that those products provide, get a company to want to buy them because they're so massively better, like 100x better speed and performance, that it keeps everyone wanting to keep up with the newest Nvidia gear. And then you mix that with all the software that they're developing from an AI perspective. Overall, I mean, this company is just hitting on all cylinders. They projected 8.1 billion for this coming quarter, which will be sequential growth, also to be driven primarily from data center and gaming. Gross margins of 65% again. So overall, I mean, this company, they have so much to announce on. When you look at the pages of announcements they had just from new product launches, it was like 5 pages, which I'm not going to cover all here, but I encourage you to go to their investor presentation. Their GTC conference is coming up at the end of March, which I'm sure they'll have a lot of new announcements there. Jensen always likes to put on a big show there and announce where they're headed. But this, I mean, from a company hitting on all cylinders, I would say Nvidia is doing the best out of any company in the world, in my opinion. So I have a lot of stock in it, and we'll continue to keep adding. So those were the 4 updates, and so for me, all 4 of those companies were hit very hard during this time of downturn in our market. And the thesis is still there. I mean, you look at the revenue growth and the profit growth and the no debt, or if debt is there, that they can cover it easily. That's what I look for. And they're all founder-led companies. So that is what I look for. And it only takes a couple winners to hold for, 10, 20 years to really make life-changing generational wealth. So hopefully this has been exciting and helpful. I'll definitely be covering more of these stocks in depth. But I'm just glad to be back with you guys. Glad to talk about stocks, and don't be discouraged. I know it's right now is a rough time out in the market. It's not fun, but use this time to, if you have cash on the side, make decisions on what your highest convictions are and to slowly dollar cost average. Once again, not financial advice, but this is what I'm doing. And we're going to have rate hikes. We're going to have more volatility. Just think of volatility as opportunity, especially if your time horizon is a lot longer. If your time horizon is shorter, then you do have to play more defense in situations like this for sure. But if it's over 10 years, or even 5 to 10 years, I think we're okay, and just keep investing in good quality run founder-led companies. and we'll be doing more videos like this soon. So coming up on the hour, thank you again for watching Dominating Your Investments. Remember, it's never too late to dominate your investments. And I will be talking with you guys soon on the next live stream.